Welcome to Charts Today. My name's David Linton, and today's edition for Friday, the 18th of September, comes to you from London. And a lot happened in the markets yesterday in quite a few areas. So let's take a look. We see a mixed screen here this morning. We've got mixed colours, but on the whole, it's the US indices that are heading lower, so that's what's quite key. Dollar is back to short-term bearish, so we are still bearish on the dollar here. The long, medium, and short-term charts are all heading lower. Remembering this is my weekly, my daily, and my 60-minute charts, and the corresponding point and figure charts with targets giving me a downside view. And these are all tracker charts in Updata, and you just literally click on the next screen, and the charts will update. So this data coming to you from Thomson Reuters Icon. Refinitiv icon, I should say, but I'm running multiple services into Updata, which you can also do. So looking at the euro this morning, it's looking stronger again against that weaker dollar, and the dollar yen rate has fallen below the 105 level. We're sitting at 104.55 this morning, so we're starting to see the lowest levels closing for the week for quite a few years. So that weak dollar is really having an influence, and a lot of this, of course, is driven by the comments from the Federal Reserve yesterday. If we take a look at sterling, it is looking stronger against that weaker dollar this morning, so that's some respite. But of course, against the euro, sterling has been weaker on the basis of Brexit fears. But the last few days, sterling has actually just improved back to around that 110 mark. Bitcoin is nudging the $11,000 mark, so it's looking bullish on all three time frames. But the key thing is what are the US stock markets doing? We look at the S&P 500 index. We're down 0.84% yesterday. We're bearish below the cloud, so no real recovery here yet. And what we really have to worry about is the lower low, taking out the low that we saw at the end of last week. So that's the thing to really watch. We see the big bearish engulfing candle here on the weekly chart, the move lower, and so there's a little bit of uncertainty going on there. If we take a look at the NASDAQ, of course, tech stocks have really rocketed since the recovery back in March. And the key thing here on this chart is, again, the engulfing candle and the lower low. We are more nudging this territory on tech. And most interestingly, if you look at the 1 minute chart, we saw the downside targets. This was on the 3rd of September. All been filled and met on the 4th of September. And then we had this other one last week, which was exceeded. That's bearish, of course. And yesterday's move, we had two new targets generated to the downside, 4.5% lower, 7% lower, and both are activated with columns that then went lower than the base of those thrust columns. So it is bearish on that 1 minute chart, and we haven't yet activated these daily downside targets, but if we do go to those 1 minute targets, that will be activated. A new lower low, in this case 0.5% lower or 1% lower, would activate those downside targets. So we need to watch that quite closely. The Dow was down 0.5%, and if we look at the S&P Mini, it's down very slightly, and the Nasdaq E-mini has recovered. So the futures are bouncing around all over the place at the moment. The volatility has also been quite. The VIX volatility has also moved quite a lot, and the key with the VIX volatility, of course, is this rising is an indication that markets are fearful. It's often called the fear index, so keep an eye on that. The UK market, the future is down 0.5% this morning. The DAX is relatively flat. Markets are generally waiting to see what happens in the US, and the CAC Current is down 0.4%. Hasn't really recovered any ground since it's recovered half its ground since the falls, but not like the US markets, which were making new highs. Tokyo is actually up 0.4%, so that's looking a little bit better, and the long-term chart actually starting to just come out of the cloud, looking a little bit better there, and we're bullish on the short term as well. The Hang Seng was up 0.47%, not enough to really change the picture here, though. We're still bearish on all three time frames. We do have downside targets here, matching pretty much what we're seeing in the US. The Shanghai Composite was up 2%, so Chinese stocks looking a little bit better, but still bearish below the cloud there. And in India, we were down 0.2%, so sorry, up 2.4%. up 1/4%. So looking a little bit better here, and again emerging above the cloud, a bit like Tokyo. The Aussie market actually is down, and so we are just struggling to break to new highs there. Gold this morning is sitting at 1954, not enough to pull the chart back into bullish territory, but gold is really in a consolidation pattern. These long-term charts are very bullish. If we move to new highs, we activate an upside target to $3,000, some 50% higher. So looking pretty amazing if we can get to new highs on gold. And of course, there are a lot of gold bulls with everything that's happening in the world at the moment. Silver also looking pretty strong. Upside targets to be activated here as well. But at the moment, we're in a consolidation phase. US 10-year yields were relatively unchanged. We saw a bit of a spike down yesterday on the Federal Reserve's comments, but on the whole we have been teetering along this 2/3% level really for 6 months now, so little change there. Taking a look at the energy mix, Brent crude has continued to rise, so when we broke at the start of the week, we've really pushed higher. We've got a target to 45.10. Of course, the key thing is, are we going to make a lower high and then a lower low? At the moment we can't say, but that's what we have to watch for. We do have this downside target to $30, which was activated. We have also got 3 upside targets, so it's quite a tough call, medium to long term, to call where crude is going, but we need to make a new high, and for the moment that looks like a little bit of a struggle. WTI, much the same picture of course, but the big news yesterday was US NatGas. It fell some 20 cents on storage numbers. No one really saw that coming, and the market there's yesterday's candle, a massive move down. The storage numbers, the build is much bigger than expected in US storage, and so and then with the hurricane and demand falling for gas, this market has just reacted very, very quickly. So we were already bearish below the cloud, so it was quite key here. We were bearish below the cloud. We had this downside target, so this is quite a key chart now. And of course, we're on the floor. We're back below the $2 level on the front month contract. The futures contracts are still sitting in further months out, sitting around $2.5, $3. But for the short term, we've really drawn down there. Contract expiry is some 10 days away. Looking at coal, we're at 58.15. We've held up pretty well on coal, in fact. So that's looking pretty good. And emissions sitting around €28.50. We do have quite a lot of downside targets on the 1-minute chart. If you're trading emissions, keep an eye on those. We are coming back to find some support, but of course the key thing is, can we break €30 and activate that €39 target? Gas is down this morning in Europe. We see MBP in the UK down 0.5% and TTF down nearly 4%, so quite a big move there. Global gas markets are probably a bit rocked by what happened in the US yesterday, and winter gas is down 3% as well, so that's quite low. German power is down 1%. We're sitting at €42, a bit like emissions, just waiting for that breakout. So for the moment, the energy mix is looking a little bit subdued today. We do have a downside target on the 60-minute chart, some 4% lower at €40.30. But for the moment, all eyes are really on what's going to happen today with the NASDAQ, and just watch these futures and keep an eye on the 1-minute targets for any moves to new lows. Here, that's the level, so that's around 10,950. We've moved below that. We then start to see new lows, which would be bad, of course, for the market. That's it for today. Have a great weekend. Happy charting. See you on Monday. Bye for now.